Welcome to the Smart Business Revolution podcast, where we feature top entrepreneurs, business leaders, and thought leaders and ask them how they built key relationships to get where they are today. Now, let's get started with the show.
All right, welcome everyone. John Corcoran here. I am the co-host of this show. And you know, if you've listened to previous episodes, that we feature smart CEOs, founders, and entrepreneurs from all kinds of different companies on this show every week. And we're always delighted to be able to share their stories with you. And this episode is brought to you by EO San Francisco. EO San Francisco is part of Entrepreneurs Organization, which is a global peer-to-peer network of more than 18,000 influential business owners across 200 chapters, 60 plus countries. And if you are the founder, co-founder, owner, or controlling shareholder of a company generating over $1 million a year in revenues, and you want to connect with other like-minded successful entrepreneurs, EO is for you. You can go to eonetwork.org/San Francisco to learn more about EO San Francisco. And of course, this episode also brought to you by my company, Rise25, where we help B2B businesses to get clients, referrals, and strategic partnerships with done-for-you podcasts and content marketing. And my guest here today is Jung. He is the founder and managing partner for Embarc Advisors. It's an M&A and corporate finance advisory firm. It's based out of San Francisco. And for about 7 years now, Jay has, and his company, of course, has carved out a niche in the financial advisory landscape by bringing Fortune 500 level financial acumen to small and medium-sized businesses. He's a graduate of the Wharton School, and he has had stops along the way in his career at Goldman Sachs and McKinsey Company and all over the globe, which we're going to get to in this story. But first, Jay, pleasure to have you here today. And you got an interesting background. You were born and spent a lot of time both in the United States and in Korea. Your parents were studying for a doctorate. And so they came to the United States for that. But we were chatting beforehand, and I love to hear stories about how people were as a kid and entrepreneurial side hustles they had. And you figured out a way to go buy a pizza and sell. You get to eat 1 or 2 slices and then pay for the rest by selling them off by the slice at the Boys and Girls Club. So tell us about that.
Yeah. So, I would say even now, unit economics is at the crux of everything I do. And I remember when I was at the Boys and Girls Club, and I don't come from an affluent family, so hence I'm at the Boys and Girls Club. I would always like to have another quarter to play the arcade games, and on the weekends, my parents would let me buy a pan of pizza, and the reality is I can't finish it. And I quickly realized there were a lot of people there who actually can't afford to. There was no place to buy pizza at the Boys and Girls Club, so there was a good amount of demand. And I could sell them off at a pretty reasonable price, but as we all know, a slice of pizza in aggregate is a lot more expensive than buying the whole pan. So I would end up making my money back and then have some extra change to play some arcade games.
I love that. That's so great. And so you say your parents were kind of academics, I guess. They were getting their doctorate. So no entrepreneurs in the family that you had that you were looking up to, or what was that like?
Well, my dad was an academic in kind of like molecular biology. And then in the late 90s, he actually left his role in academia to start a biotech startup. So I did have some inspiration from him.
Yeah. And another thing you did as a kid is in Korea on the weekends, you would go to a wholesale market and buy things and resell them.
Yeah, so I loved kind of going to the wholesale market because you can see all kinds of things that you don't get to see at kind of your local retail stores. I love going there. And then there was this one incident where I brought something back that we didn't have access to. And bear in mind, this is a really long time ago. So it's not like you can just go on eBay and buy something. And my classmates were like, "Oh, where'd you get that?" And they were ankle weights. And we're all young and we're trying to be athletic. And so I sold it to him at a decent premium. And then I just went back next time and bought a few more, figuring that there's a demand for that. And I ended up just kind of having like a small merchant business in that sense. And one day was ankle weights. Next it would be some kind of different like collector's cards and so forth. So had a little trading business.
That's great. We'll get into your story. You end up, spending time at McKinsey Company and working at Goldman Sachs, but looking back on it now that you are an entrepreneur for the last 6 or 7 years now, was there a part of you that kind of knew that you would one day be a business owner, you'd be an entrepreneur? So it seems like there were the inklings, at least from your younger years.
Yeah, so actually, I did a tech startup in the early 2000s before I started Embarc, way before I started Embarc. So I was interning at Bain& Company. I hated it. So midway, when a high school friend rang me up and said he literally built something in his dorm room and needed someone to help raise capital and then sell it, do the sales and marketing of it. I joined. I quit my internship. I joined. We did that for a few years, raised money from Softbank and some other VCs, lost a lot of money from all the investors, returned a little bit back, but ultimately liquidated. And I realized, well, you know what? I have no idea how to run a company. And so who knows how to run a company? Supposedly McKinsey does. So I went back to consulting. I joined their corporate finance practice. I learned a ton there. And I found that as a non-engineer, M&A is a big way to drive value for a business, large and small. So from McKinsey, I went to business school, and upon graduation, I wanted to really dive into the whole M&A and capital market side of finance, which is why I joined Goldman in their investment banking division.
Mm. Um, I want to get into kind of the story around what it was like starting Embarc and everything. But first, I know I think it was when you were working for Goldman. Was that when you were doing over 300 days of travel a year?
It was at McKinsey because I was McKinsey's Asia corporate finance office was in Hong Kong, so I technically relocated to Hong Kong, but I don't speak Cantonese. And most of the local clients prefer to speak Cantonese. So I ended up being staffed everywhere from Singapore to New York, everywhere but Hong Kong. And as a result, I really traveled over 300 days per year. I was the top tier on multiple airlines, multiple hotel chains. And at some point, I actually got rid of my apartment in Hong Kong because I just didn't need one. And I would stay at a
Wow.
hotel even when I was back in Hong Kong.
Wow. And do you think back on that period of time fondly, or was it burning you out? What's your thought on that period of time in your life?
No, it was definitely fun having that life in their mid-20s. I think was fun. It was interesting to kind of go to different places around the world, all kind of expense paid. But coming out of business school, as I was kind of thinking about settling down and building a family, I didn't think it was sustainable. And I know they travel less in the US, but I think 3 years was sufficient for that life.
Yeah. Yeah. And I've heard from some people saying that Goldman can be a great training and education, but then other people say that sometimes it's a difficult place to work because it's so competitive and there's very intelligent people there working long hours. What was that? Was that a similar experience to you?
Yeah, I would say all of that's true. I think it's a great place to learn and get trained. I wouldn't be doing what I'm doing right now if I didn't spend those years at Goldman. I think it's very competitive and tough. Um, but if you think about it, so is everything else, right? If you want to become like a professional athlete, if you want to become like the best in like a SEAL Team 6 in the military, or if you want to become the best lawyer, I think everything's competitive, and you kind of have to put in that effort to be at the top tier. And I think those two go hand in hand.
What drew you? At what point did you decide that, I want to go out, I want to start my own advisory firm and we want to be able to, serve the smaller companies? I imagine many of those companies, are not able to take advantage of, working with a firm like a Goldman, which I imagine has much larger clientele generally.
Yeah, so when I was at Goldman, in the last few years of my tenure there, I was working on great deals. I was working on the Yahoo deal to Verizon. I sold MuleSoft to SanDisk, but I also carved out about 10-15% of my time to meet startups. And back then, a lot of these natural language processing startups, chatbots, blockchain startups were really hot. And I got to meet a ton of them. Having that kind of Goldman name card gives you access. And I really
And
enjoy.
by the way, any of those are they household names now that you talked to when they were tiny?
I'd say most of them actually got acquired way early on,
Okay.
even before we got to the current kind of like large language model boom. Um, but yeah, so I enjoy talking to those founders. But at Goldman, people will kind of half joke like, why are you
Why are you
doing
doing
that?
that?
Like, why are you spending time doing it? We're not
Yeah.
going to ever make any money there, and that's not what's going to get you promoted. And it was one of those things that kind of got me thinking, well, maybe I do something that I really do enjoy. because it is a tough environment. It is a grind. And that kind of led me to think maybe there's a opportunity to advise startups leveraging the toolkit that I've learned in the last, decade plus, working at some great firms. And that's kind of what led to what eventually became Embarc.
Yeah. And was the idea from the beginning that we would switch from a success fee model to an hourly fee model?
In the beginning, I tried all different business models. I tried a project-based model. I did look at some contingency models. I didn't really like the hourly model because I always thought, well, I've seen lawyers work hourly, and I always thought, well, what keeps me from working slowly? What keeps
Yeah.
me from just billing more hours?
Yep.
People would know anyway. Long story short, after experimenting with a variety of different models, lawyers are very smart. There's a reason they I think maybe you were a lawyer before, but
I am. Yes. A
there's a
recovering lawyer.
reason.
Yeah. Yeah.
There's a reason those smart lawyers chose to bill hourly. And so after a lot of experiment and reinventing the wheel, I went back to the tried and true model of billing hourly.
Yeah. Of course, it doesn't always work out in your favor. Well, it depends on how you define favor, right? But I know that you had some clients where had you had a success fee model, you would have walked away with a lot more money in your pockets. But talk a little bit about that, those types of results where that has happened.
Yeah, again, it kind of goes back to unit economics. I think if you bill hourly, um, you might not have like a huge home run like an investment bank does, but I think you can build a more consistent and stable business. And the big difference is if you bill only on contingency, you don't know where you're going to make a revenue. So that means a typical investment banker has to chase 10, 20 deals. And when one hits, that's going to pay for the quarter or the half year. Two hit, that pays for the year. But you don't know where you're going to get your revenue. So you got to work on a whole bunch of deals. For us, it allows us to work on a handful of opportunities, really give our best on those opportunities because we know we're going to get paid. So it's a much more stable business. It's I would say like the tech analogy is instead of like selling big ERP projects and mainframe computers, we're going to go for a SaaS model where, it's more consistent billing, consistent service, and not shooting for home runs. And I think the flip side of that is also it helps with the team. The team doesn't have to work 80, 100 hours per week. We have a much more balanced workload and consistent that's predictable. So for those reasons, I thought the hourly model worked better for the middle market and startups.
And what were some of the challenges for you starting it up in the early years of the business, going from working at Goldman, working at McKinsey to now running your own company?
Yeah, I think needless to say, business development and sales was hard, but I think that's a problem that every entrepreneur faces. I say, aside from that obvious one, hiring was very hard because, finance people in general we're very risk averse. And people generally want to work at bigger investment banks, public companies, Fortune 500 companies. And it's very hard to hire for, what was originally a one-person shop. And then we were remote even before COVID. So when I interview and say, well, we don't have an office, we're all remote, and you're going to be employee number 2 or employee number 3, the look on their face was more like, is this a real company? So it was very hard to hire in the beginning. And not to mention, we can't pay like a traditional investment bank or whatever. So
was it harder? It sounds like it was harder to recruit people to come work for you than it was to get clients. Like, did the clients have any hangups about the fact that you were a remote advisory firm?
I think in the beginning, there was a little bit of reticence and some people would ask like, oh, are you going to be on site for like at least 2 or 3 days a week? And we would just say that that's not what we do. But given that we work with smaller businesses, there was a little bit more flexibility there.
Got it. And tell us about, I know there's one company you worked with. It was an IT services company that you worked with that, well, they were thinking about selling. They ended up getting a healthy offer, $30 million or something like that. You negotiated it up, but they ended up changing and just through that process decided to pursue a different avenue and ended up getting a better result from it. Can you take us through that one?
Yeah, this was one of our earlier IT services clients. I was introduced by a mutual acquaintance. And when I met them, they already had like an offer from a couple private equity firms. I looked at the offer, it was easy to enhance. And so they engaged us. We negotiated the offers and made it much better. And then they chose one and kind of pursued that down the path a little bit. But ultimately, they decided to walk away from the deal, even though we almost negotiated everything and we're good to go, mainly because they realized that they weren't ready to sell. And they found going through the whole process, they realized, wait a minute, like private equity is nothing special. We can actually do what private equity does, which is buy smaller companies at a lower multiple, add that to our business grows and gets a higher multiple, and we're getting that valuation arbitrage anyway. So they turned around and said, you know what? We're not going to do the deal. And we're actually going to do our own private equity playbook. And so we helped them do two things. One, we helped them raise debt. So even though they didn't sell the whole company, they raised debt, took some money off the table, bought a house and whatnot. And then we helped them find opportunities to acquire and then raise more debt to acquire that business. And then shortly after that, like more private equity buyers got interested, and we ended up running another process to sell the business. And so I'd say all in all, around 18 months later, we sold for almost $50 million. So it
Wow.
was significant value uplift. And I really love that case study because it kind of shows what Embarc can do. We're very agile, and it's not just about sell, 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 sell. But we can actually say, all right, you want to change your mind? We're okay with that. We can help you in a different way. And we can help you take some money off the table. We can help you do an acquisition. We can help you sell the whole thing at a huge value uplift. And it doesn't cost you an arm and a leg. So,
Yeah. I'm curious. So you said when that IT services company came to you and they already had some offers from private equity to sell, and you said that the offer was easy to enhance. I think that was your words. Do you have a process that you go through when you look at an offer? Obviously, there's the multiple, there's the total dollar amount, but what's your analysis like? What do you look at, and what are you looking for when you're looking at an offer?
yeah, so I think I have the benefit of kind of gone through this process multiple times on the sell side, but also we work with private equity firms on the buy side, so we know how they think about it. And normally on the sell side, when we look at a LOI, there's probably about 10 to 15 items that we want to look at. It's not just the headline value, also the structure, the terms, escrow, all of that. And some of these LOIs, because it's usually their first offer, just at first glance, there's already a ton that we think we can go back and request, and they would make concessions. So in that sense, I think having the benefit of looking at so many of these, it was easy to negotiate upwards in value.
Yeah. And what's your approach towards managing the interpersonal elements of these things? Because, I imagine a lot of times you have a client that this is their baby. They've been building for many years. Most of their net worth is tied up in this company. There can be a lot of anxiety around it. How do you manage those, like the emotional and psychological elements of the process?
And that's why I read so many books.
I see the stack. You have a massive stack over your shoulder.
No, well, look, I think an investment banker or an M&A advisor inherently has to be a trusted advisor. And I kind of joke that going through an M&A process, especially a sell side, very much entails being a part-time therapist. And sometimes that's therapy between the two co-founders. Sometimes it's just it's with one of the founders that may want to sell one day, may not want to sell the other day, has anxiety over like, why is the buyer not responding, or why is the buyer not giving me this? So there's a lot of emotional factors, and I think we do have to kind of play the role of therapist more often than not.
Yeah. There's another case study that we were going to talk about, was a recent deal that you had. It was a company that tried to sell twice with an investment bank. It didn't work out. They got introduced to you, and take us through that process.
Yeah. So more recent deal where, like you said, it was actually a sizable company owned by a husband and wife. They wanted to sell the business. but it didn't work out the first go around. I think the first go around was an investment banker. It didn't work out, and then they said, you know what, we can do it ourselves, and they gave it another go by themselves. Didn't work out, and they had interested buyers. They just couldn't consummate the transaction for one reason or the other. And so then we got in touch through their legal counsel, who we had done some deals together before, and they hired us, and we ran the process. And again, I can see like there was a lot of complexities and nuances in the business, and we have the luxury of being able to spend a lot of time on a specific deal, since again we're not chasing 10 deals at the same time. Long story short, we ran a process, and I think we got almost like a dozen plus bids, and a handful of them, 4 or 5 of them, were actually significantly higher than what they were expecting.
And what do you attribute that to?
Well, I think if you think about it, what's the saying? Facts tell, stories sell. And if you're out in the market to buy a company and you get a SIM from an investment bank or a broker, chances are it's 50, 80 pages. It's a bunch of slides, and you go through it. It's called a confidential information memorandum. So it's a bunch of facts. There's no real story. And I think what we as a firm do really well is we take the facts, and then we actually have a shorter deck. Typically our decks are maybe 15 to 25 pages, but it's all about weaving a story. And I think that really sells well with the buyer because they understand what they're getting. And I think that allows the people that are really interested and invested to stretch a little bit further. And that's what matters in the margin. Who can stretch a little bit further? I don't need all 12 bids to stretch. I just need 3 or 4 bids to stretch on the margin.
And is that ever hard with your clients, the companies that are looking to sell, to convince them of the story, or do they place their trust in you and say, you tell our story the way that you think is most compelling to the buyers?
Well, it's an interactive process. For every transaction, we probably spend about 6 to 8 weeks together. I'd say the hard part is getting a lot of the raw data out from them, because most companies, they don't have a robust KPI tracking mechanism. A lot of their numbers are not clean. So once we get the data together and then we hear their story, their qualitative story, I think that where the magic happens is where you can take the story, weave in the numbers together. So it's kind of like a story told in data. And that's what really resonates with, say, a private equity or a strategic corp dev buyer, because they're all finance people, right? So a numbers oriented story is what sells really well. And I think that's where we make a big difference. And usually when our clients see that, because it's still their story, where we might sprinkle a little bit of a pixie dust on it, they'll buy into it, and it's a collaborative process.
Now, I know when these bids came in, they had an interesting reaction. You want to share that?
Yeah. So it was probably one of like our highlights, and this is why I really do this job. So we got over a dozen bids. We went through it with them, and we'll always ask, like, so okay, any questions? And there was a little pause, and the one question that the business owner asked was, "Why do they want to pay so much?"
You must have absolutely loved that.
And I'm always prepared with Q&A and try to get ahead of it, but I didn't have an answer for that one. Because your business is great.
Well, and you told the story in a compelling way, backed up by data.
Yeah, well, so that's what we do.
Yeah, that's great. That's great. Well, Jay, this has been great. Really interesting diving into your story about Embarc, and excited to hear what happens with you in the future. Where can people go to learn more about you and the work that you do?
Yeah, so I'm pretty active on LinkedIn. I think my LinkedIn is Jay Jung, but it's LinkedIn/Embarc, EMBARC, and then our website is www.embarcadvisors.com.
Excellent, Jay. Thanks so much.
Thank you, John.
Thanks for listening to the Smart Business Revolution podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.